Hey guys, it is so good to be back. I missed everybody. I appreciate some of you reaching out. We've had a long little family emergency, pretty big ordeal. So we're now back. You know, things are not back to normal, but they're back to the new normal. Let's just say so. Anyway, I appreciate you guys joining tonight. I apologize. I set this for 8:30, and I thought we were going to have some friends over, but they didn't end up making it. So I'm going to move it back an hour. I know that that'll be a lot better for some of you. So anyway, here we go. We're going to start tonight. Tonight, I thought what I'd talk about is it has been 5 weeks, I think, since I've been on this live stream, and maybe longer than that. Oh, I think it's been 2 months. It's been more like 8 weeks since I've been on this live stream. So I thought what I would do is give you guys a sense for where I ended up in 2025, where I'm at year to date, 2026. And then if we have time, we'll talk about what kind of a portfolio would I recommend for brand new investors, somebody who is like new to the investment world. I had a conversation with some folks this past week, and one of the things that that it helped me to see is that not everybody understands all of these nuances that we talk about on this live stream. So I think sometimes backing it off and just kind of getting a little more what would I get basic about things is not a bad idea. So with that, if we got time, we may hit that a little bit. We'll just kind of see where it goes. I want to see what kind of questions you guys have. I want to hear how your portfolios are doing. Hopefully everybody is doing well. I've seen some activity on the Discord that, and if you're not a part of the Discord, you consider joining us on that. There's a link to that in the notes to this live stream. So join us on that, and we can talk about performance and stuff like that. So does that sound okay? Hopefully so. Since I moved the time up really far, I'm not expecting folks to be on right away. But let's go ahead and get started with a little bit of. You know what? I gotta. When you get out of practice on this stuff, you end up forgetting to share the screen, and if I don't share the screen, you can't see it. So poof, there it is. All of a sudden, it just shows up. So tonight we're going to talk about. First thing we're going to talk about. I probably should have flipped these: a review of 2025 and also year-to-date 2026, and then the portfolio. So, all right. Let's go ahead and get into what we did in 2020. That says 2025. It should say 2026. Ooh, man, live update right before your eyes. 2026 WCI performance. Okay, let's go ahead with this. This is where we're at in 2026. So we are, February the 2nd. So this would have been actually through January 30th because the brokerage account doesn't update until the next day for some reason. So I can't get the numbers for today. So this is going to be as of Friday, but it is really the whole month of January. So I thought that would be kind of fun to see. You can see in this chart the Russell 2000, which is 2,000 small mid cap companies, just shot off like a rocket back in early January. Now it is also looks like it's falling back to earth now, but it's still way up, man. It is up. They are up 5.35% on the year. The highest that they have been up so far is 7.92. So they are coming back to reality, but they are still about double what everything else is, including my portfolio. But you can see here that the my portfolio, the Wealth Circuit investing portfolio, is the green line. It is trailing the Russell 2000, but it's ahead of the S&P 500. It's ahead of NASDAQ, and it's ahead of the Dow Jones Industrial Average. So we are up, about 100 basis points, 150 basis points on NASDAQ. We're up about 69 basis points on the Dow, and down about 286 basis points on the Russell. But here's the cool thing. One of the things I like to look at is a risk-adjusted return, because I just, at this point in my life, I just don't really like a lot of volatility. And so risk-adjusted return kind of adjusts for the volatility. And right now, from a risk-adjusted basis, we're beating all four of the indices. So that's really kind of cool from a year-to-date perspective. I thought I would also update you on where we're at with the project that we did back in August of last year, where we had two of the AI leaders. We had ChatGPT and we had Google's Gemini come up with a good dividend growth portfolio. We plugged that in. We also took a snapshot of where the WCI portfolio was, as well as a snapshot of the S&P 500, the NASDAQ, and the Dow Jones. And we didn't do the Russell 2000 because there's not a formula that I can find in Excel that would give that information without physically updating it. And I just wasn't into that. So here's an update on that from the end of the year. This is on January the 4th. You can see that, and this is compared to August 11th. So August 11th was that date where we set in stone what those portfolios started at. And regardless of what happened afterwards with my portfolio, whether I bought or sold, I left all of it the same. No changes. So there's no changes to the WCI, no changes to Dow, no changes to NASDAQ, no changes to ChatGPT. Everything just only market changes is what you're seeing here. But we were up 11% from August 11th through the 4th of January. Dow was up 10, NASDAQ was up 8.65, S&P was up 7.61. Now, ChatGPT and Gemini, they just didn't do so well. I'm drinking a little half and half iced tea for you guys tonight, and it is really tasty. ChatGPT and Gemini, 1.2% positive for ChatGPT, and a negative 2.1% for Gemini. Not stellar, but here we go. Here's the update for February the 2nd, which is today. You see that our portfolio is up about 14.39% from August 11th. Dow was up 12.2%. NASDAQ 10.56, S&P up 9.62, and ChatGPT's doing a little better at 5.27%, but Gemini is still actually losing money at 0.55. So I think we will probably stop this, stop the madness. We will stop this. We'll stop the reporting on this because things. The whole point was, can we get a good portfolio from this AI intelligence, right? And they just didn't do so well. Maybe it needs a little more time. Maybe I should have given it some better parameters, but it just did not do so well. So anyway, I thought I would give you the year-end update on that. And so what changes am I going to make in 2026? Let's talk about what I did in 25 first. Hold on just a moment while I pull up. I've started using a new, here we go. Can you guys see that? Started using the new tool. It's called Snowball Analytics, and I pay for this. I'm not an affiliate or anything. I paid for this. Let me make it a little bigger. And I kind of like it. I think what it's going to do is it's going to give me some ideas about what to build into my spreadsheet. But but also when I'm traveling, when I'm out doing things, the spreadsheet's not the most accessible software in the world. So I think, but this is like web based. So I think I may actually keep this and use it from time to time. So where are we at? We've got as of today, we're up 0.54% today. That's the daily number. And in total, up 55%. So that's pretty good. Although I don't know that I trust that, because when I loaded the info in here, it doesn't go all the way back to the 5 years that I've been doing this. But that's not why we're here. Why we're here is we want to see the growth, and we want to see, let's just say, a 1 year growth. I should have pulled my 2025 stuff. I actually can get to that. So never fear, we can solve that. We'll do it on the fly. But let's look at the last year. We can see that let's go down here. This is more fun. So this is the S&P 500 and the NASDAQ 100. Let me add the Russell 2000 to this, because we love to just compare to other things. So here we go. We're going to compare. So over the last year, what am I looking at? The portfolio is the blue line. Oh, and this is year to date. We have already seen this in my spreadsheet. Let's look at the last year. And you can see the portfolio is the blue line. We are right there with the NASDAQ. Let's see. We're at 21.57% for the last 12 months. NASDAQ is 21.53% over the last 12 months. Now that's going to be February to January, right? That's not 2025, but we'll get there. We'll get to that. The green one is Russell 2000. It's up 17.5, and the yellow is the S&P 500, up 17.56. So we have, the last 12 months, we've had a really, really good time. See if there's anything else. This is kind of cool. It tells you where the gains have come from, and this is again year to date. So flip back to, we're up year to date, probably about 2.5, 2.75%. You can see that we've got a lot of stocks that are higher, and we have 1, 2, 3, 4, 5 that are lower on a year-to-date basis. You can see Intuit is probably the biggest loser at 22% down, but Cormedics is right there behind it, 21% down. Microsoft, believe it or not, down 12% this year, and Visa down 4.8%. So a couple of the stalwarts are not having a great year. Atmos Energy is down 0.66, but that's just rounding. But we see on the plus side, we got Lockheed Martin up 31%. Northrop Grumman is up 20%. SOX, which is the ETF that I use for the chip industry, up 12%. RTX up 9.7%. Hershey is up 8.8, believe it or not. And U.S. Bank is up 8.5. I was not expecting that. So we've had some good moves from these stocks. So let's take a look at the last year. Where have our gains come from in the last year? We can see Amphenol. Amphenol is our big winner of the last 12 months at 109%. So it basically has doubled in the past 12 months. RTX has roughly doubled. It's at 98%. Google's up 55%. SOX is up 43%. Northrop Grumman up 41%. Lockheed Martin up 40%. So we've got some really good returns out there. And, we had some that weren't so good. We've got Intuit that was down 22% over the last year. Cormedics is down 16%. EOG down 11%. And Hess Midstream down 5.9%. So I'm really pleased with how the portfolio did last year. Let me switch back here let's go back to this. Give me just a second here, guys. This is the 2025 charts. Yeah, this is what we want to see. So I'm going to try to Try to get this to where there's a lot less numbers to look at, so it'll be a little more fun. Okay, so the so the portfolio ended up. Let me make this just a skosh bigger. Can you guys see that now? The portfolio return for 2025 as of December 31st was 20.55%, compared to the S&P 500, which was 17.88%. The NASDAQ beat us. They were up about 21.14%. But, I'll take that because the volatility in the NASDAQ was not as was more than what I had in the portfolio. The Dow Jones was up only 15.65, and the Russell 2000 for the year 2025 only up 12.8%. So we did really well for the year. I tried to save the dollar amounts, and I think I know where they are, but I don't want to put you guys through that because it doesn't really matter. What matters more is the percentage, because that's makes it kind of apples to apples. But you can see here the risk adjusted returns. We just kind of nailed it. We knocked it out of the park. If I go back here to Snowball Analytics, one of the things I can look at is, now that I want to find it, I won't be able to. See if it's in here. Growth, metrics, report. Yeah, I don't know if I'm going to be able to find it. Well, I saw it earlier. I just don't remember where it is. And what it is, just so you know what it is it shows the volatility. Let's go over here to let's go to metrics. Yeah, this is pretty good. Yeah, this is it right here. So you can see volatility. They've got it labeled as beta, which is true. That is beta. You can see that the market volatility, this would be the S&P 500, is it's not giving me the number. Oh, it's 1. That's by definition the market volatility is the market volatility. So it is 1. So at we want the portfolio to have a lower volatility than the market. So as the market's moving up and down, we want our portfolio to move a lot less. And I don't know if I can do that with. Anyway, you get the idea. We want the portfolio to be not as volatile, but still have some competitive returns. And we are at 0.877. So that is lower than market. So we've got a lower than market volatility. This is the Sharpe ratio. Can you guys see that? I'll make it just a little bigger. The risk adjusted return, the Sharpe ratio. This is what I use in my spreadsheet. It's relatively easy to calculate, but you can see here that the higher the Sharpe ratio, the better the risk adjusted return is. You can see Russell was way down here at 0.35. That's horrible. But we are beating the Russell, we're beating NASDAQ, we're beating S&P 500. So we're beating all of those. We are at 1.174, much higher than any of the markets. But here's another cool risk-adjusted return ratio. It says it requires attention, and it's because it's below 2. But, I'm at 1.928. That's pretty close to 2. But you see Russell is down around 0.54. So the risk adjusted return for the Russell 2000, really poor over the last 12 months. I think this is the last 12 months. Yeah, it has to be. The NASDAQ was, come on, give me that, 1.226. And the S&P 500 is 1.538. So the portfolio, just in my opinion, and I don't want, don't want to break my arm, pat myself on the back here, but I think we had a really good year in the portfolio. and it has really started to come together again in 2026. So now, what do I do? This is where I wanted to be when I hit this slide right here. So now, what do I do? What do I do in 2026? I think I'm going to look at rebalancing the portfolio. If you guys have seen my spreadsheet, you know that I have a ranking system. I've got some stocks that have performed so well that I don't know if there's enough. I don't know if there's a lot of juice left to squeeze out of those. Maybe there's better juice in other stocks. So I may look at rebalancing the portfolio for individual stocks. But I mean, it wouldn't be like wholesale. It might be 3 or 4 different stocks. And then just continue researching companies. And I want companies that have a solid strategy. I want companies with strong and well capitalized financial statements, a management team that can be trusted to execute the strategy with these strong financial balance sheets, and then, predicted or potential solid double-digit returns. So that's what I'm going to be looking at for my portfolio in 2026. And to be quite honest with you, I've not done a lot with it in the last 4 or 5 weeks. And that is the beauty of doing it the way we do it. It is we're investing in quality companies with quality management teams. And, we just don't have to do a lot to the portfolio. I did have 2 transactions in the month of January. And I don't care who you are. That's not very many transactions. I bought 2 particular stocks, and we can get into those if you want. So, but anyway, some of you guys have joined, so I want to kind of get back to where you guys are. Let's see. We got Pat. Yeah, Pat, I hope you can stay awake, my friend. And again, I saw that, so I thought, you know what? Let's just go ahead and get this thing started. I need to let my buddy Pat get some sleep tonight. It's when you get to be our age, Pat, it's time to get some rest. So, but I appreciate you joining tonight. So Shannon's here, and Shannon, I got your email. I appreciate you reaching out, my friend. And it's been a rough time, but I think we're back toward a new normal now. So appreciate that. And that's one of the cool things about this community is it's really about people who are wanting each other to do very well. And so we're kind of like almost a family here. Michael Swami interrupted Chrissy Hind to watch you. That is, I'm so much prettier than her. Is that what you're saying? All right. Well, maybe not. But I think she's probably got me by just a little bit, So it's good to have you, my friend. Hey, Dresh, good to see you, buddy. Thank you. I'm glad to be back. It is it's really fun to kind of be back with you guys and kind of getting back into the swing of things a little bit. Honeybees, good to see you as well. So our speaking of honeybees, we have some cold weather that hit us. We were fortunate about 30 minutes to our west. It looked like a militarized zone. I mean, the ice had just broken trees, and trees were in the roads and stuff like that, just across the line into Mississippi. We had like this warm area that came up from the Gulf, and we basically had very little. We had some ice the next day, but it's just because there was so much rain, it didn't have any place to go, so it froze on the roads. So it worked out pretty well for us. But anyway, that's neither here nor there. I was talking about the bees. The bees, I got into one hive last week. I don't like to get in them much just because it's so cold out. But, they seem to be happy and healthy. And so I closed them back up, and I said, I'm going to leave that, just let that kind of do it for me. So I think as far as I can tell, we still have 6 healthy, thriving hives. So we've got, I don't know what the groundhog did today, but I do hear we have a couple of polar vortexes headed our way. So probably the month of February is going to be a little chilly, but we'll see. We'll see how the bees do. Gemini should have bought Google. Yeah. Yeah, that's exactly right. And it's kind of funny because they didn't. I don't think they had Google in their portfolio. I'd have to look, but it's been a while. But yeah, they should have bought Google. That was a good move. Would have been a good move. What's up, my friend Fast Eddie? It's good to see you in the house. So NK is in Vietnam, and that's a little different for you, isn't it? I think you're normally in Israel, if I've got the right handle here. So anyway, well, that's cool that you're joining from Vietnam. What time is it there? It's probably tomorrow, right? So it's probably in the morning. So yeah, it's good to see you, man. Would I ditch out on Intuit? I don't think so. I think I'm a long-term investor, and I believe that there's some long-term value in Intuit. I think the strategy that they're trying to implement in the long term is going to be good. I'm not going to try to catch the falling knife here. I'm going to keep the shares that I have, but at some point, I think the market will recognize some of this value, and it will begin to start its rise again. And it's going to be around that point that I buy a few more shares to average down. But I've learned in my tenure that just trying to catch it on the way down is not the greatest. I don't usually end up well when that happens. I like to see a little bit of upward turn. So it's good to see you, man. Hey, Nate, what's going on, buddy? It's good to see you. This dividend portfolio, when you hit 75 and have to start taking required minimum distributions, taxes and your IRMA are going to be very painful. Yes, you're right. And one of the things I'm looking at, Fast Eddie, is doing some Roth conversions. There's going to be a period of time where I have I have a certain amount of income coming in right now, and then there's going to be a couple of years where I don't have as much. And then when Social Security kicks in for me, it will jump back up. So I may take those couple of years and try to do some Roth conversions to try to eliminate, because there aren't any RMDs for Roth. But yeah, the IRA, what would that be? The traditional IRAs would be subject to RMDs. But it is what it is. What's the old saying? Is having a big tax bill is not always a bad thing, right? Because if you got a big tax bill, that means you're making a lot of money. So I'm okay with that. I do want to minimize taxes, but I'm blessed to have income to pay taxes with. So I'm okay with that. I can't take it with me, It's I've never seen a hearse carrying a U-Haul trailer. I've just never seen it. So as long as I've got the money to live on and enjoy life, I'm in good shape. All right. So Nathan wants to know, what are the two stocks that I bought? Both of them. Well, one of them, Nathan, is very near and dear to your heart, and that is Cormetics. I ended up averaging down a little bit on Cormetics. And again, it was one of those things where I didn't want to, catch the falling knife, but it's been doing really well here the last couple of days. So, but it is pretty volatile. They did, I think you had posted in the Discord that they have announced a huge buyback. And so that's why it went up a lot today. And so maybe I missed my chance to get that average, but I'm okay with the average I have. I'm down, down around 975 or so average price per share. So I think in the long term, I'm going to be just fine on Cormetics. So I averaged down on Cormetics, and the other one is I averaged down a little bit in Intuit. So I just basically wanted to catch some of that and get some lower average costs. So those were the two stocks that I bought. Those were the two transactions that I had. So every other transaction was either dividends or interest, So I had more than two transactions, I guess, technically, because when they put a dividend, when a company pays a dividend and it goes into my account, that's considered a transaction. But I didn't initiate it. I only initiated two transactions. That was a purchase of Cormetics and a purchase of Intuit. Oh, wait, I skipped one. Gary, what's going on? Thanks, man. It is good to be back. And can't believe we're already 30 minutes into this thing. And I feel like I could go all night. Vacationing in Vietnam for a month. Wow, that is fantastic, man. And it's 9 a.m. on Tuesday. So it is tomorrow. So let me know how the markets open up. I may go ahead and make some. I'm just joking, man. That's great. I'm glad you're able to join while you're on vacation, man. That sounds really cool. I'd like to go over that neck of the woods. I've been to China before, never been to Japan, never been to Vietnam, any of the places over in the Pacific Rim. I've been to Russia and Romania. I've been to several places over in Europe, France, and Italy, and Germany, but I've just never been to Vietnam, never been to Japan. I'd love to do that at some point. Do you think the market, this is Shannon, do you think the market is shifting to a value play versus tech? Yeah, Shannon, I do. I think that there's money moving into value, and I think if we follow that, we won't do as well. I tend to be a bit of a contrarian from a market sentiment perspective, market trends. So, when people begin to get a little bit queasy, they're going to go into value stocks. And I have a couple. J&J comes to mind, Johnson & Johnson. It's done very well, but I'm not chasing it. I'm not buying more Johnson & Johnson. I'm not jumping into Kimberly-Clark. I'm not getting into Procter & Gamble. I just think, that's going to be a short-term thing. And, I again am not trying I'm not trying to guess what the market is going to do. I'm really trying to invest in companies that I think are going to do well with their strategy, that have a good management team and a solid financial perspective. So if I can keep those in focus and I can buy those stocks when they are at a great value, then in the long term, I think I'm going to do okay. And if not, well, I still got the bees, right? I still got the bees, and I can and I have muscadine grapes. So there we go, and some chickens. I got chickens, muscadine grapes, and bees. So I got something to fall back on, man. So yeah, but I think, Shannon, that you're seeing it right. I think there is a move to value away from tech. I think people are a little bit scared of AI. I think there was this. I don't think it was a bubble. I just think it was an overreaction to what they thought AI could be. And now some of that is really coming home to roost. And people are really trying to say, okay, so where is the money really? I mean, so I think that's kind of what's going on. Let's see here. Dresh says, since you are in the future. Yeah, that's exactly right, Dresh. I was going there too, but I thought I was the only crazy one. But looks like there's two of us, two crazy guys on the show. So NK says that Vietnam is wonderful. Highly recommend. Last year was here for a month as well. He's kite surfing. That is awesome, man. I could get into watching kite surfing. I'm not sure if I would actually do it. these old bones might not be able to stay together with something like that. But that is cool, man. Glad to hear it. Yeah, I'm happy to see you too, Steve. It's awesome. I'm glad to be back. Yeah, Michael, you are exactly right. GLW Corning is killing it. And I saw the headlines on that, and I'm trying to remember what they are. They entered into a deal with somebody. Who was it? Was it Microsoft? Maybe somebody big, and it is really the investors are really liking that. I have Corning on my watch list, and they've just the numbers have just not been there for me compared to other companies. And so I guess, what do they say? Sometimes you win, sometimes you lose. But you never win if you don't play, right? So we like playing in the stock market. Billy, it's good to see you back too, buddy. So I think it's morning where you are as well. You're actually not too terribly far from NK. Relatively speaking, I guess more you're closer than you normally would be at this time. So yeah, that's right, Honeybee. It was Meta. That's it. That's who it was. So yeah, they've really been killing it because of that. It's good to see. Fast Daddy says I got a lot of ice in Dallas Fort Worth. His driveway finally had the ice melt off of it today. Wow, it's been a while. We had it since Friday night going into Saturday of the week before. Yeah, that's a long time, man. And for 21 years, maybe 22, almost 22 years, I lived in northeastern Ohio. And, I was a Southern boy who went up to northeastern Ohio. And at first, the snow and ice, it was just like, man, this is crazy. But then I kind of got used to it. Just became, it's kind of like, being down here, the grass grows in the summer, so you got to cut your grass. Well, up there, it snows every 3 or 4 days. So you have to shovel your driveway, right? But being down here, and I'm sure the same in Dallas Fort Worth, they just don't have the equipment to deal with it like they do up north. And so once you get a little snow, especially ice is the worst. But because you can drive on snow if you know what you're doing, but ice, you can't go and you can't stop. So you're just kind of messed up. So I'm glad to hear it's melting off for you, though. Now you can go fast, Eddie. Sorry, I'll see myself out. All right, Billy just woke up, man. I'm glad you woke up though, because won't be too long though. I'll be going to sleep. Let me know how the markets do so I can buy some good stocks tomorrow. Yes, we are talking about Vietnam. NK is in Vietnam for a month. So you love Da Nang. You and your wife love Da Nang, and you just rented an apartment there. That is cool. So now, Billy, are you in the Philippines now, or are you in Vietnam? And if you are, then you're probably really close to NK. And you don't have to answer that. That's just curious. So some people don't want to share all of their cool stuff. But we don't have a lot of people on here. But anyway, got to drop. Okay, buddy. It's good to see you. Thanks for joining. And it's good to be back. And hopefully I'll be back pretty consistent now. Oh, you grew up in Western New York, so that would be Erie, maybe. Was it that far west? Because I've been to Erie many times. So All right. So what are you guys buying? What are you guys selling this week? Oh, okay. Rochester, Rochester. Let's see. I didn't read all that. He grew up in Western New York. Averaged 90 inches of snow. That is crazy. Yeah, we didn't have that much where I was. Um, use a snow blower more than a lawnmower. Now we did that as well, but um, it's actually kind of funny because I the whole 21 years we were in Ohio, I paid a service to do our lawn. I didn't cut a yard until the last 2 or 3 years we were there, and then we had moved into like a city, and so it was just a block, or just a lot. So I went ahead and cut that. But here I have 14 acres, and it's all grass. So I cut it. But 2 acres is my yard, and so I've got this cool 61-inch lawnmower. It is really awesome. But I do pay a guy to help me do that because it gets to be a lot. 14 acres is a lot of grass to cut in the summertime around here. So Billy, you're in the Philippines now, going back to Da Nang in March for 5 months. Wow, that is cool. Wow, that's fantastic, man. I'd love to be over to visit over that part of the world. So maybe I will. Maybe I'll set that up for something like later this year. Yeah, Michael's been long on GLW for 4 years. Somebody told me it hadn't done anything for years. That is right. It had stayed pretty flat. Just for grins, just because we can. Let's take a look at. Let's get over here where I can get to it. Let's take a look at the stock listing and let's find GLW just for fun. And like I say, sometimes things happen, a deal happens. I mean, my spreadsheet isn't able to predict like the Meta and Corning deal. It just, obviously it can't do that. But yeah. So my spreadsheet's calculating it's actually going to be a negative return for the next year. That it's 184% overvalued. I don't have it updated for the Meta transaction though, in all fairness. So this may be wrong, but the numbers just don't get me that excited, from a spreadsheet perspective. So. But congratulations, Michael. I mean, that's a great win. I don't remember how much it's up, but it's up a lot. So good job on that. You're killing it, man. Steve wants to buy more Sobo. I need to look that up. Let's check out Sobo. Oh, I didn't even log in. Hey, what do you guys think about Fast Graphs? I've had a subscription to that for like 4 years, and I used it heavily at first, Southbow, but now I don't use it very much at all, and so I'm wondering whether I need to continue that subscription or not. So with my spreadsheet, it kind of gives me a little bit of what I look for. I looked for originally in that. In Fast Graphs. So let me know what you think. Fast Graphs, yes. Fast Graphs, no. Thumbs up, thumbs down, or thumb in the middle. Something like that. So Steve is buying Southbow. It's a midstream services company. And let me read a little bit about that. It's a spinoff of TC Energy in 2024. So it's relatively new. It's a Canadian energy infrastructure firm. Transports crude oil across roughly 3,000 miles of pipeline. These pipelines connect Alberta to the U.S. refineries in the Midwest on the Gulf Coast, facilitating the movement of oil for processing and sale. This essential business is backed by long-term contracts and creditworthy customers. It sounds reasonable to me. It's got a dividend safety of 50, a nice dividend yield, 7.06%. Not much dividend growth. But it's hard to tell because it's only been paying a dividend for about a year. But it has gone 5 quarters with the same dividend, and it does have a Canadian tax rate on it, and I think that's 15%, if my memory's right. But DCF payout ratio is getting worse, so that's not exciting. See if there's anything else here that's cool. Yeah, the return on invested capital is 6% and 5% most recently. Net debt to capital 67%. Interest coverage is about 2, so that's roughly okay. So who was this? Steve. So Steve, let's just real quick, and I'm not recommending this. I'm just going to show why I pick Hess Midstream over South Bow, or really anything from a midstream perspective. So they are 40, which is unsafe, but there's a reason for that. And for me, I'm comfortable with that reason. The reason is I believe they only have one customer, which is Chevron. And so I think that's why they are considered unsafe. They've got a dividend yield, though, of 8.74%, but their dividend growth, 9.6%. They've just been killing it. They raise it like 2%, 2.5% a quarter. So, and they've been doing that for a long, long time. Let's see if there's anything else cool I can show on this. Let's look at some of the numbers. So here's, and they've been around since 2016. So roughly 10 years now. And so they have been growing. The last 5 years is 10.8. The last 12 months is 9.6% of dividend growth. And we all know that here's a good way to look at it. Every quarter, they grow that dividend by 2% or so. So it's really cool. We all know that we want our payout ratios to stay pretty flat. And why doesn't it have a why is the payout ratio stuff missing? I don't know. But anyway, 63% is roughly what that Canadian company Sobo is, and but it's Hess Midstream is considered an MLP, but it is actually taxed as a corporation. So you don't have to worry about the K1s or anything like that. It's a 1099 dividend payer. So, but as an MLP, they are required to give 90% of their earnings. I think I could be wrong on that. I may be thinking about REITs, but see if there's anything else here. Their sales just continue to grow. Although, yeah, they continue to grow. Return on invested capital, where Sobo was around 6%, 5%. Hess Midstream's around 19%. And so net debt to capital is pretty high. So that could be a concern. And the interest coverage is about 4.47, so that's pretty good. So anyway, there's no perfect company, right? But this Hess Midstream is a really solid company. If you're looking for midstream assets, it's one that it's one that I invest in. So I'm not recommending anything. I'm not suggesting that you buy it. I'm just telling you that this is something that I have in my portfolio, and I've had it in the portfolio for probably 5 years now, and have really, except for the last 12 months, because it has gone down. If you look it up here, didn't we say it went down 5.6% or 5.9%? Over the last 12 months, it's down 5.9%, but it's got a 8% dividend yield. So I'm actually positive on it for the last year, but it didn't grow much this past year. All right, where are we at here? Yeah. Oh wow, almost 4x. That is fantastic, man. Congratulations. That's good. You should take your wife out to dinner on that. I think just tell her that Corning's buying your dinner. That'd be great. So Da Nang's a great beach town. That's good to hear. Yeah, Pat, I was gonna start at 9:30 your time, 8:30 my time. I thought there were going to be people here tonight, and typically it's hard for me to get people out of here by 8 o'clock. Normally I start at 8 o'clock my time, it'd be 9 o'clock your time, but I didn't have that tonight, so I was just able to get cranking, get going, and so hopefully that's okay. I didn't mean to throw you off there, but so when I set it up with the anticipation I would have people here until just before being able to go live, but they didn't show up, so we're good. Don't have it. I've lost the train of thought, Fast Eddie. Oh yeah, you don't have the equipment maybe for the ice. Is that what it is? Thoughts on UTG? Let's take a look at UTG. UTG. Oh, Reeves Utility Income Fund. Yeah, I like it. I like Reeves Utility Income Fund. Here, let me share what I'm looking at. That might be helpful. There we go. Dividend yield is 6.43%. I think it's a good fund for an income investor. It's a closed-end fund. It's basically made up of utilities. So I think it's actually a good income-producing fund. Let's see, they got an upgrade in August of 25 to an 80 safe. Let's see, they don't grow by much, but again, they've got a yield of 6.4%. So that's not nothing to sneeze at. So here's a way to look at it. If they're growing their dividend by 1.6% over the last 5 years, now I know it went up 5.3%, but I think we have to look at it a little longer. So I tend to look at the 5-year growth in terms of what I think it's going to do for over the long term. So if you think of it growing at 1.6% and you're getting a 6.43% dividend yield, then how do I describe this? The the 6.43% is only going to grow by 1 point whatever percent, right? But the way I look at the dividend growth is that if the companies that make up this fund have the ability to grow their dividend by that percentage, that means they believe their business is growing at least that much to support the business. And so therefore I believe that as an owner in the company, I not only get the increase in the dividend yield, the 1.43% or whatever it was in dividend yield, I also get that growth in the business, and the share price over time, I believe, will adjust to capture that in the share price. So so when I think of it, I think of dividend yield and dividend growth, and I add them together, and then I also try to figure out what they're if they're undervalued, what of that I can see over the next 12 months. So you're looking at 7.5%, 8%, without considering any undervaluedness. So I think that's pretty solid. So if you're looking for income, it's absolutely solid. I like it, Pat. I think it's a good idea. Ooh, let's go back. Ooh, Hey guys, 3 year in Ithaca, New York, convinced me to move to the Houston area. Yeah, no, I'm not exactly sure where Ithaca is, but if you're anywhere near Buffalo down to Erie, I mean, you got that escarpment there that has that lake effect snow, and it is awful. Moved to Rochester, moved from Rochester to Dallas. So yeah, it's everybody's moving south. I moved from Northeast Ohio to Alabama. So, but it is a lot warmer here than it was up there. Hess reported yesterday. Yeah, I didn't look at it in detail. The market seems a bit upset, and uh, I didn't look at it in depth. Yeah, they went down. I did notice that they went down a little bit today. What, 1.5%? Let me look them back up again. 1.4%. Let me see what I can get here. Yeah, here. Let me show you the only bad thing about Snowball Analytics. Here, there we go. As you can see, I've picked. Can't see it. I've picked one day, right? I want to see the holdings performance for one day. It's giving me Google. It's giving me Johnson & Johnson, Amphenol, Sox, Microsoft, but then it drops to 0, and then it gives me Intuit. So I don't understand. That's Intuit down here. I don't understand why it gives me a lot of zeros on the one day, but it does. So that's the only drawback is I have to go somewhere else to see the one day gain or loss. Right. There's no K1 for them either, but you do have that. I'm assuming you're in the U.S. You will have the tax on the dividend the tax withholding on the dividend of 15%. You will get that back on your tax return, but I find it a bit annoying more than anything. So, but yeah, there's no K1, but there is that Canadian tax that you have to deal with. Yeah, can I talk about Hessam dividend increase of only 1.2%? Yeah, but that's 1.2% for the quarter. So if you were to annualize that, that would be 4.8%. So let's swing back here to so their growth has been around 10% over the last 12 months and about 10.8% over the last 5 years. Here's the way to look at it. So February 26 is going to go from 75.48 cents to 76.41, which is probably around the 1.2%. But if the way I look at it is I look at February of last year to February of this year, and they could wait. I guess they could do it and consistent for 4 quarters and then bump it up. But I like the fact that they actually grow it every quarter. I think it is it's nice to have sooner rather than later. So I think that's what you're asking when you say, can I talk about has some dividend increase of only 1.2%? That 1.2% is for the quarter, not for the year. Their year is typically 8 to 10%, something like that. So that's the way I look at it anyway. Yeah, Billy, I am still holding into it. I think that and ServiceNow is another one that's in the very similar position to Intuit, and I think both of them are struggling right now. I've actually got ServiceNow on my watch list as well. But I think it's there's a bit of fear on this whole AI thing and how good it's going to be, and actually for Intuit, there's also some fear that AI is going to take away some of their revenues and some of their margins because customers can just use AI to do some of the services that Intuit does. I don't think that is rational. I think Intuit can better leverage AI to improve its own margins, and there will be fewer customers who are going to go out and do their own thing. But you know, what do I know? So yeah, I'm still holding into it. I'm going to pull it up on. Here, I'll show you guys what I have here. So on Intuit, I have it is 2.1% of the portfolio, and payout ratio is only 21%. So that's not terrible. But I am down. What am I down on it? Where does it show me that? Here we go. Down 21.8%, about $10,000 on that. But overall, let me pull my spreadsheet up. Overall, the two stocks that I'm losing money on are Intuit, which you see here, and Cormetics, which you see here, down about 16%. That was almost 40% at one point earlier this year. So, I'm down 16%, $9.77 per share is the cost. I'm sitting at about a 21% loss on Intuit. But I'm a long-term investor, and I think that the management team in both of these companies are going to be able to leverage the assets of the company to carry out their strategy over the long term. Obviously, I'd love to be able to time it perfectly where I hit the bottom. I buy at the bottom and it goes up forever. But sometimes we can't do that. Sometimes we just have to find the companies and find them at a decent price and we buy. And sometimes they go down and sometimes they go up. So, but over the long term, you can see that these stocks are doing pretty well. Look at this, Parker Hannifin, 212%. That means it's 3x. So that's pretty cool. So I got a couple of 2xers here. No, there's another 2xer, the socks. Here's another 2xer, which is RTX. So, things are going pretty well overall, and I can, I can afford to take a bit of a, I started to say gamble, but it's not really a gamble. I can take a bit of a risk. Maybe that's what I'm looking for. I think I can take a little bit of a risk on these two particular stocks, and hopefully that risk will pay off over the long run. So I'm not going to get scared away at this point. I may, and again, I averaged down on both of these stocks in January. If things get really crazy, I'll probably do that again. But you can see I've got about, what is that, $98,604 in cash that is waiting to be invested, and I'm getting interest on that. So if I find some great deals, I got some cash to pull the trigger. And if I don't, then I'm getting the interest. So there we go. Hopefully that helps, Billy. Oh yeah, sometimes I step on my tongue, so sorry about that, Michael. But yeah, happily divorced. Okay, got it. So yeah, I won't mention that again. Maybe you can. Um, yeah, I'm not even gonna go there. So maybe take yourself out. Treat yourself to a nice dinner. How's that sound? That's much better. Okay, we got Billy. He bought OC recently. Shows on FastGraphs a great value. So let me see. Oops. Not aiming very well with my mouse. Oh, Owens Corning. Yeah, that's the insulation company there. Yeah, GLW is Corning. It's more of a glass company. But here, let me show you what I'm looking at. Probably more fun when you can see it. So Owens Corning, they make that pink insulation stuff that makes you so itchy. Let's see. Yeah, as insulation, roofing, and composites. So they got a borderline safe. It's a 60. Payout ratio is 20%. But their dividend has been growing like crazy. Look at this, man. Maybe something I might need to add to my watch list here. Now it does say that their earnings payout ratio is going to grow, which means that they are paying more. They're growing their dividend faster than their business is growing. Basically, is what that means. But I mean, when you pay out on average 22.6% growth in dividends over the last 5 years, it's not totally surprising, right? So yeah, that might be. I may add them. Get my pen out. I may add them. I don't even have a piece of paper. I cleaned everything up. I've got a receipt from Rural King. I'll write it on the back of here. Owens Corning. I may add that to my little handy dandy spreadsheet. So yeah, that's good. Good to here. I'll take. You know what? Just for fun, let's pull up fast graphs. It's been forever since I've been in here. Here, let me do this. I'm not even sure I know the password. It's been so long. No. I'm going to have to try to remember what the password is. So, well, I'll look it up later, but I'll add it to my spreadsheet, Billy, and maybe we can talk about it some more. Oh, Steve, yeah, you're right. I was thinking that you had it in an after-tax account, but you are correct. If it's in an IRA, you don't have to worry about that. So yeah, no, you are not wrong. You are correct. I just assumed that since it's an income type investment, that it's being held in an account that you can get to without having to pay any penalties for withdrawing. So my bad. Yeah, you're right. When I buy stuff with high dividends, it's usually in an after-tax account because I'm wanting that income to be able to pull from. So, hey, Brad, it's good to see you, man. Hope everything's well with you. Yeah, Microsoft is getting hurt with software. I think it's a buy. Yeah, I have a lot of Microsoft shares. It is one of my larger holdings. Let me see what it is. Yeah, it is 5.25% of the portfolio. It's actually, I think, number 4. If you count VU, it is number 4 on the list. So, but yeah, I'm not selling. I'm not selling here. So it's pretty high on my spreadsheet list as well. So let me see where it is. Microsoft is number 6. So it's the 6th highest rated stock on my spreadsheet. So that's not bad. I think you're right. I think it's not a bad time to enter that if you're looking to get some exposure to it. Hey, thanks for being here, Pat. I'm gonna man, we're 9 minutes over. Yeah, you made my day too, buddy. I'm glad you came in. So okay, I'm piecing these together. So we'll take that one and this one and this one, and I think what you're saying is you have a very good relationship with your ex, and that is fantastic, man. So Steve, yes, I'm still beating Gemini. I showed that a little earlier, but just for fun and just because I can, I'll show you where we're at. Boom. So yeah, we're since August the 11th, the portfolio is up 14%. Gemini is actually down 0.55%. So dead gum Chad always outruns me. Yeah. Yeah, those are Southern cuss words right there. Well, guys, I have enjoyed our time, and I'm glad to be back. So hopefully we can make this a habit again, doing it once a week on Monday nights. Um, I tend to go around 8 o'clock just because if we have people over, I can kind of shove them toward the door, uh, closer to 8 o'clock. So that'll hopefully we'll do that, get back in that rhythm again. So yeah, that's right, Nathan. If you want to join the Discord, it's in the comments to the video. So with that, guys, I'm going to get off of here, and I will see you on the next one. Take care.